weekly Wednesday webinar. Thank you so much for all the attendees. I see the number keeps increasing, so thank you so much for that support. Uh, Thank you for making time out of your busy schedules. We always say that, but we mean it. Everybody's busy, and the fact that you wanna, learn something new with us this evening means a lot. So thank you so much. My name is Eddie Villanueva. I'm the official MC of this weekly Wednesday webinars and the United States Senate Federal Credit Union as well. So if we ever have an event, as long as there is a mic, you'll catch me, talking to the mic. So thank you so much once again for being here. We appreciate your support. I see, as I mentioned earlier, the attendance keeps increasing. So thank you so much for that. And we're excited for a new topic. It's understanding IRAs. So anything that you need to know about IRAs, we'll cover, as much as we can within the hour. And of course, we have the subject matter expert with us, but that's not the introductions yet. I don't want to jump the gun on that one. I want to let you know that we want to engage with you all. We want to say hi to you. We want to read your questions, your comments. So whether you have a question and you want to say hi, or you want to say hi, I should say, please use the chat feature or the Q&A. And then Miss Carrie Lazar, can you please let's remind us, what are we going to do with all those questions? Do we throw them away? Do we like save them? What do we do with those questions?
We make sure to answer everyone to the best of our ability on the spot. Otherwise, we will provide follow-up for
You
sure.
heard it. You heard it from the best. We're going to read as many questions as we can within the hour after the presentation. And of course, if something is, a little bit doubtful, we want to give you the best answer. We're going to follow up with you. So once again, thank you so much. If you are a member, thank you so much for being a member of the United States Senate Federal Credit Union. We hope that we're giving you that 5-star service that you deserve. And of course, your financial goals are our goals as well. We want to make sure that we help you reach them. And if you're not a member, you're thinking about it like, what is United States and Federal Credit Union? Like, let me give it a try. Let me see what it's all about. This is it. We're just like, our colleague Kim always says, it's people helping people. So we just want to make sure that all the knowledge that we have, all these tools, all these resources, we can share with our members so they can be financially successful. Whether you are starting your first savings all the way to, you're ready to retire, we have a product or a service that will definitely benefit you. So thank you so much once again. I got 602 last time. 603 actually. Milton is always charging me that overtime fee. So, I'm gonna have to give him that invoice, but I want to pass it on to Miss Jarnika Trent will that introduction. So Miss Jarnika, the time is yours to shine.
Thank you. Thank you so much, Eddie, and welcome everyone again. We are so excited to have you all here. I have the lovely pleasure of introducing our amazing panelists. I'll start with myself. My name is Jarnika Trent. I am with the Membership Development Team, and my fearless leader, who's also on the line, Milton, he is also here, as well as our amazing marketing team, the one and only Carrie, who puts this whole presentation together for you guys. Our MC, Eddie, he's the face of the credit union, as you guys know. And last but not least, we have Miss Madison Love, and she is the guru when it comes to understanding IRAs today. And she's actually going to be your host. So she's going to be able to answer some questions. We have a lot of you on the line, so I'm pretty sure you're going to have a lot of questions towards the end of this. So the good news is you have the pleasure of me being in the Q&A with you guys to help answer some of those questions. Use the chat, let's engage, and make sure that you guys are on point with all of your IRA questions. And I'll give it to Madison and let's take it away.
Awesome. Well, thank you so much. Um, let's get into it. Okay, so we are covering a lot of topics here today. Oops, getting ahead of the gun. It's okay. So this is our agenda. So we're gonna cover we're going to go really quickly over everything. So if you guys ever want us to go more into depth on anything, we absolutely can. We also can, we've had members before ask for specific topics, and that has led to really great opportunities to do entire webinars on some of these topics. IRAs are not a simple beast, and so we're happy to do, we want to serve you. So whatever you guys need. So let us know. These are all the topics we're going to cover today. So let's get into it. So first and foremost, what is an IRA? So it's an individual retirement account. The entire purpose of this account is that it's a different type of savings account specifically designed for retirement with tax benefits, so that it's easier to save for retirement. And uh, so anyone with earned income can contribute to an IRA. And so that includes people who have 401ks or TSPs or 403s or 408Bs or whatever all the numbers and letters are out there. Whatever employer sponsored plan you have, you are also welcome to have an IRA. So sometimes people get that confused, or they'll say, oh, I already have a 401k, I'm good. I always encourage people to get an IRA as well. It's another opportunity to save for retirement, with a little bit, and we'll go over some of the differences here later on, but it's good to have both. So they are different types of accounts for the same goal, saving for retirement. The other benefit is that there's no age requirement for an IRA. As long as you have earned income, you can contribute. So, if you are 16 and you just got your first job, by all means, open up an IRA. This happened to my sister-in-law when she got her first big girl job at 18 at a bank. And we were all extremely proud of her. And she was like, well, I'm going to do it right. I'm going to start contributing to my 401k. And they said, not until you're 21. So I was like, girlfriend, get an IRA. And she did. So, and then as soon as she turned 21, she also started contributing to her 401k, but she'd already established those habits of saving for retirement. So she was in a really good spot. There are two main options for IRAs. There's traditional IRAs and Roth IRAs. We're going to go over those differences. And that's true for 401ks too, like in all retirement accounts. Pretty much at this point, that hasn't always been the case, but we're moving towards pretty much any retirement account can have traditional funds or Roth funds. So it's important to know which one you have in which account because they don't mingle very well. Um, and then and then there's other types of IRAs too. We won't go too much into them, but I will just mention them briefly. There's SEP IRAs, and there's simple IRAs. SEP IRA, they're both usually used for self-employed individuals or small businesses, like less than 100 people. And we do not offer simple IRAs at United States Senate Federal Credit Union. However, if anybody wants more information on that, then there's information out there. But it's definitely not my area of expertise. So, but I am an expert at Roth and traditional and regular IRAs. So that's why we're here. So that'll be the focus of this. And then, but by putting that money into your IRA, it's able to compound faster. And we'll get more into like the specific tax benefits because it depends on what type of funds those are, whether they're Roth or traditional. So let's talk about contribution limits. So there are contribution limits for any type of retirement account. 401ks are higher. So this is definitely a supplementary situation. So the contribution limits for traditional and Roth IRAs is $7,500 or $8,600. If you are familiar with IRA contributions, that's probably going to look a little funny to you. This is the first year that our catch-up contribution is 1,100 instead of 1,000. So we can thank inflation for that. So essentially, if you are 50 years or older, then you are able to do what's called a catch-up contribution. And that is true, not always that age, but that's true across most retirement accounts. And so for IRAs, it's 50 or older, and you can contribute an extra $1,100 per year. And that's just you have better success contributing younger and earlier because you have more time. Time is your greatest asset when it comes to saving for retirement. The younger that you can start saving, the more money you'll have. Not just because you have longer to contribute, but also that money has time to be invested for longer. But once you turn 50, if you're not exactly where you want to be, there is that extra catch-up contribution that you're able to put in, and it's a really great resource. And if you are starting later, definitely take advantage of it. or your taxable compensation for the year. So it's the lesser of the two. So what does that mean? This doesn't apply to like most people, but if you made, let's say you work super part-time and you only made $5,000 for that year, you can only contribute 5,000. You can't contribute more than you've made. So again, not affecting most people. Most of us are making more than $8,600 a year. But it's something to remember. My parents are retiring, and my dad is able to do private practice. He's a therapist, and so that might be his situation. So something to keep in mind. Um, the So benefits. So the main and the one that we talk the most about is tax advantages. So for your IRA, you get a tax advantage, whether you get that tax advantage up front, like with a traditional IRA, where it's taking down your adjusted gross income, you're paying less taxes today, or with a Roth IRA, you're getting that tax benefit at the time of distribution where you don't have to pay taxes on any earnings and things like that. I'll repeat that again and go into more detail when we talk specifically about the difference between Roth and traditional, but there are tax benefits to contributing to your IRA. And then the growth, you get to um, invest your IRA or any retirement account. If you are contributing to your IRA and you're not investing it, you're doing all of the hard work and getting none of the payout. It's a huge mistake that we see that's just devastating is people will be really, really good and they'll save that $50 a paycheck or $100 a paycheck or whatever they can afford into their IRA for years, but they never invested it. And so they come back and they're like, I thought that this was supposed to like double and after 7 years or whatever the case may be, right? Or whatever their expected growth was. And we'll say, well, what were your investments? And they were like, oh, I just put it in a Roth savings, or I just put it in a traditional savings, and that's just not going to earn the money that you need for retirement. So definitely make sure that you're invested. IRAs can have a lot of flexibility with investments, so we're going to go to the next one there where it says flexibility. You can invest in almost anything. You can't invest in collectibles, but if you ever want to look into alternative investments for IRAs, the world really is your oyster. Like you can invest in properties, you can invest in gold, you can invest in crypto, you can invest in all sorts of things. And then there's, of course, the traditional investments, which have tried and true. Very predictable, things like that. At United States Senate Federal Credit Union, we offer CDs, things like that. Those are very secure. And then stocks are very common, stocks, bonds, things like that. A good mix is always nice. The other thing about flexibility when it comes to an IRA is the access that you have to it. Depending on whether you're doing Roth or traditional, with a Roth IRA, after 5 years, you can take out those contributions at any time. And then there's also other reasons that you can withdraw from your IRA, like education or your children's education or certain medical expenses, things like that. And then security. Just having that diversified, safe environment for your money to grow is really, really valuable and a way to ease your mind when you think about retirement. Most you want to make sure that your credit union or bank is FDIC or NCUA accredited. We are at United States Senate Federal Credit Union, which means that up to $250,000 is insured. And like having that is also just a huge relief as you are planning for retirement. So traditional versus Roth. Okay. With a traditional IRA, and this is like, so when I say traditional IRA, I mean traditional funds. If funds are categorized as traditional, no matter what account they're going into, they are tax deductible contributions. So let's pretend I make $100,000. I contribute five. Now I made 95,000 on my adjusted gross income, and I'm only having to pay taxes on 95,000. And then tax deferred growth. So that $5,000 is sitting in my IRA. I've invested it well. After 10 years, now it's $10,000, right? Then I did not have to pay taxes anywhere along that road. So sometimes we'll get questions around this time of year, and they'll say, I didn't get my INT tax form, my interest tax form, and we'll say, right, because that money is growing tax deferred. Um, Now, another thing about traditional IRAs, and this is another thing about traditional IRAs is required minimum distributions. So starting at age 73, you are required to take out a minimum amount. We'll go into that calculation a little bit later, but there does come a point where you have to start taking money out. And then there are penalties for early withdrawals. The reason that you get these tax benefits, the reason you get the extra flexibility, the reason that you get the cool investments and all the good things is because it's incentivizing you to have money for retirement. So they don't want you to take it out early. We want you to have money for retirement. Of course, there's exceptions, but in general, we want you want to keep your money in that IRA. You might want to consider a traditional IRA if you don't have access to a workplace savings plan. I mentioned that my sister-in-law was not able to contribute to her 401k. So I told her to get an IRA. And if you're in a higher tax bracket and you're in than what you're anticipating being in retirement, traditional IRAs can be really, really helpful to make sure that you're not paying as many taxes, especially if you're at the end of your career. Traditional tends to be a little bit better. So it's really valuable to sit down with a tax advisor or a financial advisor. We can refer you to a really good one here, because it can make a big difference if you are contributing to like a Roth IRA when you're young and you have all this time for the money to grow, then you're gonna not get as good of a tax break if you're in a traditional, and vice versa. If you are in a really high tax bracket and you're going to be utilizing these funds soon, so they don't have that long to grow, then you're going to get a better tax benefit being in the traditional IRA. Roth IRAs. I'm gonna admit, guys, I'm really biased towards Roth IRAs. I think that they're the superior IRA 90% of the time. And because traditional IRAs have been around longer, they get more attention. People are more familiar with them, more people are opening them up. So I always really like to give a big plug for Roth IRAs. They are um, you get tax-free withdrawals. The way that you do that is that you're putting tax dollars in. So back to my earlier example, I'm making $100,000. I put in $5,000 to my Roth IRA. I get zero tax benefit this year. But that's okay because that money is going to sit in there for my earlier example, I said 10 years, it's now $10,000. I can take out, after I'm 59 and a half, I can take out that whole $10,000 and I don't have to pay taxes on any of it. So I never had to pay taxes on those earnings, right? So if you have time on your side, then a Roth IRA is really, really, really great. The other reason I really like Roth IRAs is that RMDs are not required, or there's no RMD for the IRA owner. Um, and that is because the money has already been taxed. And so there's no incentive for the government to have you pull that out to be taxed, right? Because they've already gotten their portion of it. And so, especially if you are thinking about leaving an inheritance to your children, a Roth IRA is really great because you're not forced to take distributions that you don't need. If you need to live on the money, that's not a benefit or pro or con either way, right? For traditional or Roth. If you are living on those retirement funds, which is great, that's why it's there. That's less of a concern. But if you have a pension and Social Security and everything's set up the way that you want it to, and you're just hoping to leave that money in there in case, Roth IRAs are really nice for that. They do some Roth IRAs do have contribution income limits. So there is a situation in which you have too high of income to contribute to a Roth IRA directly. There are ways around that, but you do get like a less good tax benefit in that situation. And so that's another reason that traditionals should absolutely still exist and that they have a good place. Is that sometimes people don't want to mess with that like backdoor Roth contribution. So Um, but I do want to reiterate or clarify. I want to clarify that if you are in that, if you make over that amount, you can still have a Roth IRA. You just cannot contribute directly to it. And then penalty-free withdrawals of contributions. So there's what's called a 5-year rule. So if you are contributing to your Roth IRA, that money is free for you to take at any time after 5 years. So that first 5 years is just an incentive for you to keep it in there. But after that, you may remove contributions, not earnings, not the growth that you do need to wait until you're 59 and a half, but the contributions can be taken out. A really good tip for specifically right now is that if you do not have a Roth, and I have convinced you to open a Roth by the end of this presentation, you can open up a Roth IRA and you can make a prior year contribution. IRA contributions are allowed until April 15th of the year after the contribution is designated for. So you can go in and so you can call me up tomorrow and you can say, Madison, I want a Roth IRA. And I'm going to say, I'm so proud of you. Good for you. Way to be ready for retirement. And I'm going to get you a document. You're going to fill it out. You're going to open up that Roth IRA and then you're going to say, I want to contribute $7,000 for 2025. And I'll say smart. And then we will put $7,000 in for 2025. That means your 5-year rule starts January 1 of 2025. Because of that prior year contribution. Your IRA is open the year of the contribution, okay? After April 15th, there's no little handy trick to that, right? If you call me up on April 16th and you say, Madison, I want a Roth IRA, I'll say, that's so smart, good for you, let's do it. And we'll open it up and you'll say, okay, I want to make a contribution. I'll say, okay, we can only make 2026 contributions, let's do it. You put in $7,000. Your 5-year clock starts January 1 of 2026. Still a great thing. It just buys you 1 year, but that's just a little fun trick I like to tell people this time of year. So let's do a side-by-side comparison. Um, so with the traditional contributions are pre-tax, whereas Roth contributions are after tax. And distributions in retirement are taxed as ordinary income, whereas distributions in retirement are not taxed. So that's another element too with distributions with a traditional IRA is that does count as taxable income, right? So whereas you're not dealing with that with a Roth. So sometimes people will utilize both IRAs. Which is absolutely an option. You can absolutely have both of them because then they'll just pull out enough of that traditional IRA to either satisfy an RMD or to stay in like a certain tax bracket, and then they'll pull the rest out of their Roth. That's a good option too. Um, and then withdrawals with a traditional, the contributions and earnings are taxed, whereas the withdrawals, the contributions and earnings are not taxed under certain circumstances. So if you pull out early, that's, obviously gonna trigger some penalties and things like that. So, and then RMDs are required on traditional and they're not required on Roth. Okay, IRA rollovers. So, this actually came up today with one of my colleagues. We were talking about how IRA rollovers, that term gets applied to a lot of things, and it can be a bit confusing. So, typically, there are two types of rollovers. One is from an employer-sponsored plan to an IRA. That's always called a rollover. So you have been working at your job, you leave it, you go to a new job, you want to consolidate those retirement accounts because otherwise they can get lost, whatever the case may be. So you call me up and you say, "Hey, Madison, I want to roll over my money from my 401k and put it into my IRA." And I'm going to say, "Great," and we're gonna help you do that. You do need to start that transaction with the 401k financial institution, but you also need to let us know that it's coming. So we will help you get that money from your 401k to a IRA. Okay, so that's a rollover. That's a direct rollover. An indirect rollover is where the funds go from an IRA to the member, to you, to another IRA. So that means is that you touch those funds. But as long as you get those funds back into an IRA within 60 days, it's just called a rollover. That's an indirect rollover. You can do one of those in a 12-month period, not one a year, one in a 12-month period. So if I do it in February, it doesn't of 2025, I cannot do another one in January of 2026. I have to wait until February. Um, if something happens and you're not able to put that full amount back into a new IRA or into another IRA, then you get it counts as a distribution, whatever you weren't able to put back. You can't put back in extra, you can't put back in less. You have to put back in exactly the right amount for it to qualify as that indirect rollover. Now, sometimes financial institutions will have what's called rollover IRA. And that's not actually that's a very confusing term that leads a lot of people astray. What that basically means, in my experience, is that they just did that for you. They did that direct rollover for you. They took a 401k and they made it an IRA because it was all done at the same financial institution. They just changed the name on the account. I know that happened with me at the last job that I worked at. I worked for I had I had a 401k at Fidelity when I got my job at United States Senate Federal Credit Union. I did not want to move it, and so I left it, and they just transitioned it. One day I logged on and it said rollover IRA, and that's fine. So just to hopefully clear that up. If you guys have any questions about that, though, let me know. Now, if you are wanting to go from one IRA to another IRA, totally fine. That's just called a transfer. It's not called a rollover. And so it really, if you know which one to call it, it helps us. But if not, we're going to ask some clarifying questions, and we're going to make sure that that everything's taken care of for you, and that the money is moving the right way and into the right place. Whoever gets the money in a transfer situation requests the money. So if you are wanting to transfer it to Vanguard, you need to fill out paperwork with Vanguard. They'll fax it over to us, and then we'll send them the money. Or vice versa. If you're wanting to go from Vanguard to United States Senate Federal Credit Union, you're going to call us up and we're going to say, oh, yes, we will happily take that transfer in. We're going to help you fill out the transfer paperwork. We will send it and work with Vanguard to get that money over to United States Senate Federal Credit Union. That's a transfer. That can be done as often as you want, as often as you're willing to deal with IRA departments. We will take you. That is because the government looks at all of your IRAs as having one IRA. They don't care if you have five. They don't care if you have one at Fidelity, one at Vanguard, one at United States Senate Federal Credit Union, and all the things. They view it as one. So if you're moving from bank to bank, that is just changing investments, right? And that's totally okay. So you can do that as often as you want. It's non-reportable. So that's called a transfer. The next thing on our handy dandy slide here is a conversion. So if you are sitting here listening to me talk about Roth IRAs and you're like, man, I really wish I had a Roth IRA. I have all this money in traditional and I really want it to be Roth because I want all those, I have time. I want all those earnings to grow tax-free. Then great. We can convert those funds to Roth funds. Now, by taking that money from pre-tax to taxed, you will have to pay taxes. So a lot of people will do it slowly over time, like they'll, convert $10,000 a year, or they'll, or like for instance, if you're in line for a big promotion or a big job change, and you know that your income is going to be quite a bit higher the following year, then you might want to get it all done that year because you're going to be in lower tax brackets. Michael Schimmel, who is our financial advisor at Fellows, who we're connected to, he is great at that conversion strategy. Also, earlier I mentioned that if you have more income than what you're allowed to have for a Roth IRA, we can do a backdoor Roth contribution, right? What that means is that you need to have a traditional IRA, you need to contribute to that, and then we just do a conversion every year. So let's say that you want to do that full $8,600, you can contribute that to your traditional IRA, and then you can immediately convert it to your Roth. Now, that means that you're not getting that tax benefit, right, of contributing to your traditional IRA. But if you're wanting that growth from that Roth IRA, that's the way to do it. I always, always, always recommend that you talk to a financial advisor. Their services are free. And if you are trying to do something like a backdoor Roth or a conversion, it's really, really good to strategize with them because this is what they do all day, every day. So let's talk about required minimum distributions. This is absolutely a topic that I can spend a whole hour talking about and did recently. So at the end of last year, we did one of these webinars on required minimum distributions. You guys are welcome to watch that. So today we'll just go over it quickly. But if you guys have any questions about it, please feel free to watch that webinar, ask questions, things like that. If you want a one-on-one discussion, we're happy to do that too. So essentially, an RMD or a required minimum distribution is when you turn age 73, that will raise to 75 in 2033. But right now, for the next few years, it's going to be 73. That changes sometimes. It used to be younger. But as life expectancy goes up, this age is going up. So once you hit age 73, then you have to start taking a certain portion out from your traditional IRA funds. That you get an extension your first year. So if you want to wait, you have until April 1st of the year following the year that you turn 73. But if you do that, then you're going to have to take out two that year, right? Because you're going to have to satisfy the year that you turn 73 and the year that you're 74, okay? That's a one-time extension only. Typically, your deadline is December 31st. It does count as taxable income. So, you'll just be aware of that. If you do not do it, if you say, I don't need this money, I don't want to take it out, then there are penalties for not taking it out. They have gotten so much more friendly about this. It used to be 50%. Now it's only 25%. 10% if you fix it right away. So if you're like watching this and you're like, well, I'm 74, I definitely missed last year, and today's April 1st, so, and it's after banking hours, I can't get it out, it's only 10%, if you do it promptly, if you fix that mistake promptly. And then, okay, so when I told you earlier that Roth IRAs don't have RMDs, right? And then here it says RMDs and Roth IRAs. So the the caveat with Roth IRAs is that for the owner, there is no RMD. But once your beneficiary takes over that Roth IRA, they will have to follow RMD rules. That RMD age is based on the original owner. So if you are 75 and you pass away and you leave your IRA to your children, they will have to immediately start taking RMDs. However, if you are only 60 when you pass away and you leave your RMD to your children, they will probably your Roth IRA to your children, they will never need to take an RMD because that account has to be drained before you would have hit RMD age. If you are 72, then they won't need to take it for the first year, but they would have to take it in the years after that, right? So it's just depending on your age. Hopefully your beneficiaries are with a good financial advisor or a tax advisor. And they're getting told that information. And then this is how we calculate the RMD. It's the prior year balance or fair market value. Your bank will have that information divided by the life expectancy factor, and that equals your RMD. So what is your life expectancy factor? So there's a few tables that go over this. The most common one is the uniform life table. But if your spouse is greater than 10 years younger than you or older than you, younger than you, or there's a couple other reasons, right? If you're a beneficiary, certain beneficiaries get different tables. It's all on the IRS website, so you can absolutely go look. But most of us fall under that uniform life table. So they essentially figure out like a life expectancy number. So you divide your balance by that life expectancy number, and then that's your RMD. All of your financial institutions that you have IRAs at will calculate this for you. However, it is your responsibility to make sure it's accurate. It should not go up insanely it should not be insanely different from the year before. So, um, if you're noticing something weird, say something. Have them look it up. Have them calculate it on. There's also calculators out there for it, and stuff. So, very, very easy information to get, and it's very, very easy to verify. Okay, so let's talk about the differences between a IRA and a 401k. So a big difference is who contributes. So with your IRA, that is an individual retirement account, which means that only you can contribute. The one exception is that if you don't work and your spouse does, or vice versa, and you guys file taxes married jointly, then the spouse who earns money can contribute into the spouse who doesn't, or who's like a low income. Like if your spouse works part-time and is only making $3,000 a year, you can contribute the full amount because based on your income, right? So, but generally speaking, it is just you who's contributing to that. Whereas a 401k, it's through your employer. So, typically they will offer some kind of match, whether it's, a full, like up to 5% or just 5% guaranteed, or like 4%, and then like that last, then you have to do five in order to get 4.5, whatever your company decides. That is such a valuable thing to take advantage of. It's so, so valuable. It is essentially part of your salary. And if you choose not to take it, you really are leaving 5% or whatever of your salary on the table. And so I highly, highly, highly encourage you that if there is a company match, to take advantage of it, because where else in the world are you going to get 100% investment return, guaranteed return, right? So if you put in five, you're getting five back, you're getting 100% of your investment back every single time. So definitely take advantage of that. And then your IRA is absolutely in addition to that. So have match your employer and then contribute more to IRAs. The nice thing about the IRA is that you can access it without like the connection to your employer. So with a 401k, there usually has to be a triggering event in order for you to take money out of it, or for you to move it or to change. Sometimes even with investments, you have to leave that employer first. And if you really like your job and you're working there for, 30 years, bravo. So you're definitely going to want that IRA because there's just more flexible options with accessing that money. Investment options are sometimes different. IRAs are very, very, very open with investments. 401ks, a lot of times you have to pick between options that your employer offers. They're usually very well vetted options. And so that's not a bad thing, but if you're somebody who's interested in alternative investments, or if you want really, really secure investments and you want like CDs and things, having that diversification of account types is really valuable. Contribution limits are super different as well. The 401k contribution limit, I believe for this year is like 24,500 um for contributing, and like a 72,000 max between you and your employer. And then the catch-up contribution, remember for IRAs it's 1,100, for 401ks it's 8,000. So 401ks offer a lot higher of amounts, which is why they're really, really valuable as well. But some people, especially if they're trying to catch up, or if they're looking for those tax breaks or whatever, and they want to contribute more, absolutely utilizing an IRA is a really great option. You don't obviously have to max out your 401k to contribute to an IRA. And then, of course, just as a reminder, that IRA contribution limit is 7,500 if you're under 50. If you're 50 or older, then it is 8,600. Distributions are different. Again, I already hit this a little bit, but distributions in the 401k, and like moving money and things like that, a lot of times are connected to your employer, or whether you're employed or whether you're not employed, things like that. With an IRA, it, it's also just different between like which types of IRA. There's a lot of nuances to distributions in general in the retirement industry. So definitely do your homework before you take a distribution. because there are ways to not be penalized or taxed and things like that. And then there's ways if you do it wrong where you get taxed and penalized a lot. So do your homework. That money is accessible to you. It's your money. But do your homework so that you're not losing. So as far as USSFCU IRA options, we offer traditional and Roth IRAs. We mostly focus on CDs. If you are wanting more, we do have that connection with Fellows, that financial advisory firm. They are wonderful, and Michael specializes in TSPs, so they're very tailored to our membership based. Um, and so you even through USSFCU you can do more than CDs and things like that. Um, and then we have no setup fees or monthly or annual maintenance fees. And then of course you can purchase CDs, share certificates with those IRA funds. So let's talk about Retirement Central. Not only do we want you to have an IRA, we also want you to be able to be knowledgeable about it. So Retirement Central is really great. There's a lot of education opportunities on there, planning tools. I was just talking to Carrie before we hopped on here, and she was talking about how much she loved all the various calculators that are on there. My parents are my dad is hoping to retire at the end of the year, and we're all very excited for him, but he is so anxious about making sure that he has enough retirement in any situation. He wants to make sure that my mom is taken care of, and it's very sweet. But these there are planning tools out there. Retirement Central is a great way to access them, and it's really reliable information. So. And then also online account management. So you can, if you have a certain transaction that you want completed, you can request it via the online account. Me and my team are the ones who get that request, and we will take care of you. So, really great resource for you if you use it. So, just going into resources here. Retirement Central, like we just talked about. USSFCU Advisory Services, that is Michael Schimmel at Fellows. You can schedule a meeting with him. Like I mentioned earlier, it's free to talk to him. Everyone should have a financial advisor. Everyone should have a financial advisor. Um, they look at more than just your retirement accounts. They make sure that you're set up for life. And then irsgut.gov is a great website. When I don't know something, that's where I go. And so as things change, as you know, if you're having a hard time understanding things, very clear black and white uh, information. And then last but not least, I am not a financial advisor. I am not a tax advisor. And so please do not take anything I have said tonight as tax advice. I can connect you with certified people if you need that. But this is just for educational purposes. And I'm happy to answer any questions.
Awesome. Thank you so much, Ms. Madison Lowe. As always, we really truly enjoy you coming in and providing this type of presentations for us. We can tell that this is it, that this is home for you. So this is the reason why you do what you do for the credit union. So we truly appreciate it. I'm sure that the information provided has been very helpful to everyone in attendance. As I stated at the beginning, we are going to share a copy of this presentation. So and I believe Carrie already put a link in the chat if you want to get ahead of everyone. You're more than welcome to access it. If not, we'll be emailing that as well to you in the next couple of days. But again, I know this is still tax season, so this is one of the reasons why we have been adding a lot of emphasis to the IRAs, I'm sorry, and then what potentially what options that you might have available to you. And there are many, but the most important thing is, and can you go back, Madison, to the contact information for us? Did we provide that in there, one of the slides? Um, but
It's
what I was saying.
not specifically on that slide, but I put it on the slide on the link to the slides
Okay,
or
got it.
email. Sorry.
Got it. Because I was going to say, you can always call us at the 1-800 number. You can press option 7 and just say the name of Madison Love or Candace Davis or Raven Owen. Is that her last name? I always
Raven Owens.
Okay, perfect. So and then you will be connected with either one of those amazing individuals that are running the IRA department for the credit union. So again, thank you so much, Madison. Let's see, let's open it up. Are there any questions in the chat or the Q&A that we might have, Jornika?
Yes, it is. I have a question. What's the difference between an IRA savings account and a IRA certificate?
That's a great question. It's the rate of return. So is the main difference. Also liquidity. So when you open up your IRA, we will automatically put you into an IRA savings. Most financial institutions will do that. An IRA is an investment account. You have to invest it in something. So it gets invested automatically into a savings account. That money is really, really liquid, right? Like, so you have a lot of access to it. So because of that, that interest rate that you're gaining back on that is really, really, really low. Usually it's less than 1%. Whereas a CD is going to be closer to 3 or 4%, depending on, where CD rates are. And so you're going to get a lot more return in a CD, but it's not as liquid. You're locked into it for 4 years or 1 year. Even we have some as low as 6 months. And I think our longest one is 5 years. So you can't access it during that time, but because of that, you get a higher interest rate. You're going to earn more. Your money is working harder for you. So if and I because you shouldn't be needing access to your IRA, your retirement money very often, it's better to put it in a CD or some other kind of more lucrative investment because then you'll get more money back. You'll be better set up for retirement.
Awesome. Thank you, Madison. We have a question. Are the financial advisory services available to all members of the credit union, even if your IRA is held by another company?
Yeah, so they will look at, so Michael is our representative. He will do a whole financial workup. So he will look at anything that you want to show him and go through it. He'll look at your retirement accounts, he'll look at your regular accounts, he'll look at investments outside of retirement. Like he'll make sure that you're set up for life.
Awesome. Thank you, Madison. Does anyone on the panelists have anything else they want to add? I think that is surprisingly all the questions so far.
Actually, I do see a couple anonymous questions that came on as well. Uh, can I contribute to both a traditional and Roth IRA at the same time?
You can. That contribution limit, though, is for both. So if you want to, you can absolutely do that. And some people do, especially if they're trying to, if you're only like going to be $2,000 in the next tax bracket and you want to put $2,000 in a traditional and then the rest in your Roth just to keep in a lower tax bracket, great, right? Great strategy. But you that 8,600 if you're 50 or older is for all IRAs. So traditional and Roth. So if you contribute 8,600 in a Roth, you have nothing left for the traditional and vice versa. But if you want to split that in any way, great. Totally fine.
Oh, good to know. I learned something new today. Actually, that was a great question because honestly, in my perspective, I thought you can have one or the other. So I'm glad that you explained it that way. So thank you
Yeah.
so much. Now, true or false, Madison, can I withdraw money early for emergencies or major life expenses?
Depending on what it is, yes. So, for instance, like education is one. There are some medical expenses. During COVID, there was an opportunity for you to withdraw. And so absolutely. So if you are in a situation, I think domestic violence is one that recently was added. They've recently added some additional ones. So if you're in the situation where you're like, I have to access this money, it's worth calling somebody to see if you can avoid those taxes and penalties and access that money.
Perfect. As you can see, if you ask, the IRA department, they can give you the specifics if that's your situation, because I know there's like certain things that might qualify for an emergency that you may be able to withdraw as the one that Maddie mentioned. So just ask, and, as a member, ask what your goal is, what you're trying to do. And it doesn't hurt to ask. The most that can happen is a no, but there's other alternatives as well. If you place your funds in a 5-year IRA with a 4.85% return rate, are you still required to pay out 20% taxes upon withdrawal?
If you are withdrawing it out of the CD and to put it into another CD, no, because you did not take any money out of the IRA. The IRA is an umbrella account, right? So you can be invested in all these different little investments and it's good. Now, if you take that money out and distribute it and make it non-IRA money, you're going to pay taxes on traditional funds every time.
All right. Thank you so much. I appreciate that. Jarnika, I don't want to take the thunder. I do see another question. So if you want to read that one, please.
Yes. So actually I had someone who had their hand up. I think Aura. Um, I don't know if you put your hand back down or you were still interested. If you are, put your hand back up, and after this question, we can get to you. The next question is going to be, is there a limit to how much I can transfer from a traditional to a Roth?
As long as you're willing to pay the taxes on it, my understanding is no. Um, so yeah. So transfer as much as is prudent. Now, if you are in the situation where you are transferring a large amount of money, it might be worth it to look at like making a 5-year plan, just to save you money in taxes. But there are like calculators out there for you to do that. That's like Michael will help you with that if you want to set a meeting with him. So that's just worth researching. But if you're like, nope, hey, I actually didn't work this year, so now is the time to do it. Unemployment, a silver lining to unemployment is that it's a great time to convert funds. Or a low employment year, absolutely, like convert a huge chunk. It's a good time.
All right, thank you. I have Veronica.
Yes.
I'm going to have you come off mute.
Can you hear me?
Yes, hi, welcome.
Okay.
Hi,
Oh,
Veronica.
hi. Okay. I'm a beneficiary from my husband TSP. I'm trying to understand all this. Did I not hear you that I can take my TSP, portion of my TSP, and put it in a traditional because we are members of United States Federal Credit Union, both of us.
Yeah,
And
so
do, oh, I have one more question.
yeah, go
I
for it.
know he was 72 when he passed, so I'm 67. Does that same um, rule apply to me as far as me taking it out? Do I wait till do I have to at 73 I have to start taking out too, taking out the money
So
too?
So
Okay.
you, as his spouse, have
Hmm.
more options. The
Okay.
spouse can take an IRA or take retirement accounts and make them their own. So you can transfer it to an IRA at USSFCU or anywhere, and make it your own. I would really encourage you for your specific situation to call Michael and set a meeting with him. He is specifically he has expertise. He's the expert on TSPs. That's what I think I'm trying to say. He's the expert
Good.
on TSPs, and he's also very good at like beneficiary information. So you should not have to start RMDs until you hit um, RMD age, as long as you take it as your own. So,
Okay.
but there's a lot of different nuance to that. So I would schedule a meeting.
And I've already started the process. It is on. They have already recognized me as me being the what took it on my own. Yeah,
Great. Yeah,
I'm
taking it
the
as your own.
account holder now. Yeah.
Great.
So
Great.
now I just set up an appointment with what's his name again?
Michael Schimmel.
Ooh, that's a lot. Okay.
Yeah. Carrie, I know sometimes Carrie can put his information in like a link to schedule a meeting with him in the chat.
Okay.
Carrie, are you
I,
able to
I
do that?
just threw it in there, and here comes the calendar link.
Amazing.
Okay.
Okay. Thank you
Yeah, so
so
you
much.
can click that link and you can just schedule an appointment with him. It's a free service that you get through being a member of the credit union. And he can really help you through this.
Thank you very much.
Yeah.
Thank you, Ms. Veronica. We appreciate you. And you're officially part of the panelist team because you came off mute. So thank you so much. That was such an amazing question. And maybe somebody on the attendee list had the same question as you. So don't be afraid of asking those questions. Somebody might be able to relate to the answers that, Madison is giving us. So Back to you, JT.
Yes. All right. We have another question. Does USFCU withhold taxes when members make IRA withdrawals?
Not very often. I'm going to tell you the one time that do. It's if you are taking a lump sum distribution and you're a resident of DC. DC requires that if you take a lump sum distribution, that you have to withhold state taxes. Now, with federal taxes, we'll do whatever you want. So we do withhold for federally based on your request. If you ask me what you should do, I'll say I can't tell you. I legally can't tell you. But that a lot of people will do 10%. The other thing that I will tell you is that you might want to look at what tax bracket you were in last year and withhold closer to that amount. So 10% is kind of the introductory standard. People who want to be a little bit more like safe and covered will do like 20%, and then people who want to be like really on the ball will look at what tax bracket they were in and what they're paying in their highest tax bracket and what they're paying in that to withhold federally. So yes, we do withhold federally if you want. If you don't, if you want to put zero, by all means do. But if you want to withhold, we will. Now for state taxes, we only will do DC.
Awesome. Okay, thank you so much. Are meetings with Michael held virtually? Yes, he can do virtual meetings. Absolutely, Monica. Oh, that was answered.
You can do it in person
Um,
well if you would like. It's whatever you're comfortable with if you're
Yep.
in the
He
mhm,
could just
area.
do talk to you by regular phone. I think there's a Zoom option in there when you're scheduling, so you could have the
mhm.
video, or of course, he could go to his office or wherever works for you.
Yep.
Yeah, absolutely. Awesome. Those are being a lot of great questions that were asked tonight. I mean, truly, I know, like I stated early, um, getting to know all the benefits of having an IRA are very important. And it doesn't matter how old you are, whether you are, studying your professional career or you're already thinking about retirement. There's really not a time, to choose on opening an IRA. And Madison, can you tell us how difficult is it? For example, I have my IRA at another financial institution, but I'm not so happy because the plan that I'm in, it's not paying that I could potentially get if I bring it over to the USSFCU. How difficult is the process?
We try to take care of it as much as we can for you. So what we'll do is we'll help you fill out an IRA transfer request form, and then we take it kind of from there. We'll send it off to the other financial institution. Every once in a while, if they're taking too long, we'll ask you to bug them, and then they'll send us the check directly, and then it's in your account. So it takes some time, but it's not hard.
Talk about work smart, no hard, huh? We
Yeah,
just fill up the form, give it to Madison's team, and they do the rest for just like magic, So,
yeah.
I should say it takes some time. So, definitely, as long as you ask the right questions, fill out the form how you're supposed to, the money should be in your account in, no time. Very, very soon.
Easy.
Milton, you came on mute as well.
No, I was just going to say it's just easy peasy.
Lemon squeezy.
Yeah, yeah, and don't get intimidated because I know oftentimes financial institutions will just probably send you a bunch of forms. If you have any questions related to IRA forms, please like reach out to us. That's what we're here for.
Yes.
We truly mean what we said. We are here for our members, and that is the reason why we're here. And Madison and Tim, as I stated, they are outstanding. They truly have a passion for IRAs. And if you talk to Michael as well, he's the same thing. Although I will say, most recent he has become a much bigger fan of the Roth IRA option, just because for tax purposes. I know that I saw a couple of questions about the 20% taxes that you would be paying. That's if you have a traditional IRA, but if you have if you have the Roth IRA, you're paying for taxes the moment you contribute. And so, you know, once you hit the 5 year and you want to withdraw for X, Y, and Z, you won't be penalized. So again, but again, don't quote me on that one. Talk to Michael. He truly is an expert. But and you can use an IRA for just about anything. I mean, if you ask me, actually, I have IRAs for my both for my daughters. And the purpose of it is actually not for their retirement, but actually I want to use those IRAs so that when it's time for them to go to school, they can actually use those funds for it. So again, so many different reasons, so many different opportunities that you can explore, and IRAs are just amazing. Trust me when we say that. But anything else in there, Jarnika, that we have on the chat?
Can you annuitize IRA withdrawals once you are 70 years old?
Sorry, I didn't catch the first part. Can you say that again?
Can you annuitize, I think that's the right word, IRA withdrawals once you are 70 years old?
That is a Michael
Oh,
question. So so I that's a Michael question. That's what I'm gonna say.
yes. His information is in the chat. If you want to set up an appointment with him, please do so. You could do that virtually, in person.
Somebody was asking where Michael is located. His main office is in Leesburg, Virginia. But if you tell him to meet you somewhere where it's, closer to your home, he travels, so he's willing to do that. So if DC works for you, he can go to DC. If maybe, for example, we're based in Alexandria. I know he has met, our members in Alexandria as well. So just talk to him, let him know what works for you, and he will make it happen. He'll meet you halfway, literally, no pun intended. He'll meet you halfway. And then Milton, I don't know if you want to give everybody else like a preview of next Wednesday's webinar. I think we're done with the questions. Jarnika, you did amazing reading all of them. So thank you so much. Madison, great answers. You know your stuff, honestly. Like this is muscle memory for you at this point. And of course, the graphics were so amazing per usual and the links. So thank you, Carrie. So Milton, bring it home. Let us know. Maybe somebody's looking for a new yacht, maybe a new boat, maybe a new motorcycle, an RV to go, to all 50 states. What we're going to talk about next week, and then bring it back home, sir.
Absolutely, Eddie, and thank you again. I want to, just second what you said. Thank Madison. I know, we're coming to the end of the IRA season, but again, if you love to see Madison back, please let us know. Shoot us a message. We can kidnap her from time to time. I'm pretty sure she wouldn't mind. But again, thank you, Madison. I know you've done a lot of presentations in reference to IRAs, and again, it truly shows that you are passionate about this field. And so we truly thank you for making time. I know you're always busy, but you never say no to us, and we truly appreciate you for that. And the rest of the panel, as always, you guys are truly amazing. And like Eddie stated, you know what? It's today is April 1st. I mean, April Fools too, right? And if you're thinking about hitting the road or the water, like Eddie stated, come and talk to us and see us next week, because we're gonna tell you all about before you buy, whether you want to financing boats, RVs, or any other leisure vehicles out there. We're going to have our subject matter expert that will be presenting next Wednesday, and they're going to tell you all about the things that you should do to get yourself ready. I would love to buy me a boat, but obviously, like I told you all, I have two little girls. So I don't think I'm there just yet, but eventually I'm going to have to, I definitely want to explore those avenues later in down the road. But again, please come and join us at 6 p.m. Next Wednesday. All about financing boats, RVs, and other leisure vehicles with your friends over here at the United States Senate for Credit Union. With that being said, thank you all for taking your time. We truly appreciate your support. If you love this content, please help us spread the word. And we'll see you back again next week. Thank you.